Welcome, ladies and gentlemen. This is Brad Matheny. Today is the 25th of February. We have moved into new bearish trending on the MENT Rotational Modeling System on the daily basis. This is a warning that we have now moved away from this upward cycle trend on the SPY down into bearish trending on this bar here. We could be moving into an extended downside consolidation related to the market trend, attempting to find support maybe around this 390, 395 level, maybe getting all the way down into this 370, 365 level. We need to be very cautious going forward as the market settles. My analysis from the previous weeks were that we were going to extend into an A, B, C, D, E type of pattern into March. This could still play out, but we need to be very cautious of the fact that the rotational modeling system has moved into bearish trending. We could extend into a downside move down over into here, into into June, July, August, and then start to move to the upside like this versus moving higher, as I predicted earlier, basing here and then moving like this to the upside. So we have two very strong outcomes here. A is the downward trend persists. We try to find some support either around this area here or down in this area here and then rally upward, or we come down and find support immediately, bounce back up, move into our wave formation here, and then come back over. So again, pay attention. We have a very dynamic and fluid market trend setting up. We need to be aware of what's taking place, and we need to protect our capital at this point. Okay, let's get into the where are we? I think we're here. Let's get into the MENT Rotational Modeling System and real estate update. So we have, let's start with the real estate. Real estate moved into a very dynamic downward cycle this last week. Price reductions have moved up. Days on market have moved up. Inventory is kind of flattened out. Price collapsed quite a bit last week, believe it or not. We're now very, very close to moving into downward year-over-year trending, which I believe is going to happen over the next 60, 90 days. And you can see that the dynamics of the market still show that demand has increased a bit. There's still people out there trying to buy. But I believe we're moving into a very dangerous territory for prices. Reason being is because price trends, which have been slightly higher recently as people have been trying to top pick this market, meaning, you know, real estate's coming on the market. Sometimes it's a little higher than expected, while interest rates have moved up considerably. I heard interest rates now at 6.34% roughly on average. The Fed may raise rates another 25 basis points, but I'm seeing price reductions skyrocket. I'm seeing active listings move to the downside, price trends ticking lower, and of course what we're seeing here is active metrics, listing count metrics, are the highest they've ever been. Okay, we are now at a flooding the market at very high prices with very high interest rates. But what's very interesting is this tightness rank right here. This has collapsed to the lowest level in I've ever seen, actually, since I created this. And the seller desperation level has spiked up to 126%. To me, that means that the bottom is starting to fall out of the market. What you're finding is buyers are simply not showing up. They are simply not interested at things in this level. Now, there are still buyers that are active, but I would imagine 75, 85, maybe 90% of all buyers are not engaging at these levels unless it's a smoke and deal. Now, the whole idea behind a smoke and deal is that pricing is still too elevated. So we need to get the pricing system down. This is going to be an indication, and this was essentially downward pricing, but you can see we've ticked back up. We need to see this move into real serious downward trending to see prices move down maybe 15-20%. And that's where you're at here with this cycle, this price trend index. We need to see this move down into the -10, -15% area over here over an extended period of time, maybe 18, 24 weeks. So that would equate to about a 20, 25, maybe 30, 35% downward price trend from where we're at right now, taking a lot of the pressure off the market and re-establishing a price base. So understand that real estate is now looking very toppy, and it looks like the bottom in the market has actually collapsed. And that's right here. If this stays in this downward trending for the tightness index, and the seller desperation stays elevated, you're going to see the heat rank start to collapse. You're going to see the actual price level decline quite a bit. You're going to see the Fed worried about another potential housing crisis. And remember, buyers very much pull away from downward trending markets. When the market starts to collapse, it'll affect the economy, it'll affect stocks, it'll affect just about everything. Okay, and you will see a real seizing up of the market. The Fed wants to let this downward trending move organically. In order to do that, they need to be very reactive to the dynamics that are taking place. Okay, let's come back over here. The accumulation phase index is still holding up okay for upward trending. I had mentioned that we need to stay in this downward cycle phase and stay away from this upper area. I would love to see this roll over to the downside, but I believe we're going to stay in this sideways trend until probably June, July. So understand that means that we're going to have some fairly big volatility up over here. This is the SPY, and this means that we'll probably stay within a fairly wide 7 to 15% range on the SPY in this lower channel, trying to hold above these lows. And that's ultimately what I believe is going to happen, is we're going to waffle around, extreme volatility, up and down, trading sideways until June, July, August, and then start to move to the upside. So next we have the fear index moved up to 6.47. A little bit more fear in the market, rolling over on the SPY over here, 396.38. Remember, the rotational modeling system went bearish this week on Friday. So we have a chance, very strong chance, of some sideways consolidation above 360, 370. Just like I mentioned to you, we really need to see if this bearish trend is just a blip to the downside, rotating back to the upside, or if this is more of an extended downward cycle. I do expect this, the market sentiment index, to maybe blip, as I mentioned to you earlier, a little bit downward, maybe into like this channel here, you know, blip, blip, blip for a couple of weeks, and then roll higher. Blip for 1 or 2 weeks, and then roll higher. I think we're kind of in that type of a early basing pattern, which would be kind of like this. So it would be a blip lower, and then roll higher. Blip lower, then roll higher. Blip lower, then roll higher. Blip lower, then roll higher. I think we could be in that type of a mode here, where we get a blip lower, roll higher. And we'll know by March, April, whether or not I'm correct, or whether we see some sort of a larger downside move. The real estate hostility index, very, very extended. Again, pricing levels, if my analysis is correct, and we need to see this move down here into this 220, 200 area to alleviate all of the pricing pressure in the real estate market, that would hypothetically suggest this 400,000 average price levels, U.S. housing price level, would move down by about the same level. This would be about a 50% decline. I'm imagining about a 30-35% decline here. That would put us in the 260, 270 area, somewhere in that area, which would put us right back into 2017, 16 price areas. So again, we have a very big potential move in the real estate market. Could last many years, folks, and could be global. It could be a global real estate depreciation cycle. The U.S. To global market index have rolled lower. I do believe we stay within these channels here. And here in these channels, I think we're just rolling over after this reflation trade, looking for a new base bottom over here. I believe that's going to come probably around March 10th, maybe March 15th, maybe move to the upside. We'll see how it plays out. Otherwise, if we get into extended pressure and or some type of a catalyst event, which again could be real estate in the works, we could see a broader downside move here. U.S. Valuations Trend Index moving downward, still holding up above these lows. We need to see it hold up for the end of February. I really want to see it try to hold above this 2.79 area, which we may or may not do depending on what happens over the next week or so. We have very strong support in this area, and if we cannot hold this area, folks, then we're coming back down over here to the 2018 lows, more than likely, which would represent about another 15% decline in the S&P, possibly back down to the October lows of the S&P of 2022. So we will see. We're basically just not seeing any upward trending yet. So obviously downward trending means we are trying to form a base, trying to form a bottom, but have a broader bearish context to price trends. Okay, the rotational modeling system flipped to bearish, as I mentioned to you. Watch the earlier videos. We are moving into a bearish stance Monday morning with a 75% of our allocation. I will update this price on Monday morning. The combined positions are bearish 50%, cash 50%. We will be taking our trade Monday morning, market on open, for our bearish position in the SPY. We have been holding up very well. Oh, let me get into these. We've reallocated the stock allocation and cash allocation. We're now moving back to where we were before the bullish trending phase took place. 25% stocks, 50% cash, 25% metals, or 25% stocks, 75% cash, 0 bonds. We're moving back into a protective hedged stance right now. The idea is we will let the markets do what they need to do to figure out what's going on. We're going to move into a very protective stance, holding mostly cash and trying to stay hedged in metals while still allowing a small amount to be traded for our stock trades. And again, this is the historical results of the MENT Rotational Modeling System, holding up very, very well. We'll see how this year plays out. It's still very early. You can see here last year we had a minus 1.06. I need to update this one. We're actually off about 1.25% right now for 2023. But ideally, we are now in a bearish stance on the SPY daily, bullish on the weekly. Most of the major indexes have rolled into bearish trending, including gold and silver on the daily. And that is because, ladies and gentlemen, we have moved into this broad flagging formation on the SPY. And what's happening here, we've moved into this sideways channel. And until we break this channel, which may not be until June or July or August, we need to be very cautious of the fact that most of the trading systems are going to end up in a consolidated kind of a flat scenario. So we are back below 410. We are trying to hold up at support. We need to try to hold this lower channel here, which is this green line right here. And we have additional support on this blue, light blue line right here, which is where we're at right as of Friday. If we can hold this level going into next week, great. We might see a little bounce to the upside. Things might change. If not, we get more extended weakness. We need to be very cautious of this 370, 375 area, maybe down to 365, 367. But again, ladies and gentlemen, we've moved into bearish trending territory on the MENT Rotational Modeling System, and that means that we are changing our stance. We move back into a hedged position and prepare for potential weakness in the U.S. and global markets. Okay, guys, get ready. I'm going to release a whole bunch of new stuff this week for everyone. Come over to ment.com, see what I do, share my research with your friends, and pay attention to my research as we move forward. I'd love to have you become a member so you could take advantage of everything I'm offering. And remember, I'm going to stop doing a lot of this free marketing content in March. So I urge you to try to come and become a member, because a lot of this stuff is going to become member only starting March 1st in about 2 days. Talk to you soon.